Welcome back to another complete crypto guide video. My name is Raffay, aka the Crypto Network. In today's video, we're going to be talking about the most commonly asked question is how to dollar cost average and what is DCA and what does it stand for? What is it? How do you do it? And how do you successfully do it? And when should you do it? And when should you not do it? So, again, these videos are short and sweet, but before we get into the video, make sure you are in the Crypto Network Discord. It's a free community Discord for you guys to join. And again, if you guys ever want to support me further, you can join the VIP club, which is from the description below. Be sure to check that out if you guys want to check out benefits and what else you can achieve from joining the VIP club. And if you want to support me further, it's pretty much like a Patreon, but it's in a Discord format. So, as you guys know, I never do any paid promos or sponsored content, so this is exactly how I monetize myself. Now, let's get into today's video. I've also upgraded a little bit of the mic quality. I don't know if you guys have noticed, but I think there was a little bit of a sound issue going on in the last couple of videos, but we've fixed it. So let's get into today's video. Dollar cost averaging. Now, dollar cost averaging pretty much means, let's say you buy something. Let's say you buy Bitcoin at $10,000, right? Let's say you were to buy Bitcoin at $10,000 and Bitcoin decides to go down to $5,000. Now, dollar cost averaging means you are pretty much averaging up your total, like your buy-in entry. So if you bought something at $10,000, but Bitcoin drops down to $5,000, well, how you're going to determine when you're going to get in and what your buy-in entry actually is by doing some calculations. And it sounds a lot scary and complicated, but it really isn't. So let's say you buy Bitcoin at $10,000 and then Bitcoin crashes and you decide, well, I want to DCA, I want to dollar cost average. But before moving forward, you have to have a checklist that you want to check off and everything that has to fit in your criteria. Now, is this a crypto that you believe in long term? Check, right? Bitcoin, do you believe in it long term? If so, continue. Now, do you believe that this is going to recover? Yes or no? So I would check that off. Check, 2 checks so far. Dollar cost averaging. Is this something that is going to be continuously adopted throughout a period of time? Check. Is this something that's going to continue to receive the amount of attention to bounce back in the future? Check. And if so, is this a low cap, micro cap, mid cap, large cap? Well, obviously Bitcoin is the main crypto, so it is a large cap. Check. This is something that has a common interest from investors, so check throughout a period of time. All these things have to be checked off of your list before you move forward into dollar cost averaging, because if you dollar cost average into something stupid, it's something that is not going to really recover. And I like to share you guys my mistakes and my biggest L's throughout the period of time. So I will show you a crypto that I took one of the biggest L's in my life on, was a project called Alvi. Now, again, this is just an example. I'm telling you not to invest into this. This is not good crypto to invest into. This is one of my biggest L's, right? So because it doesn't fit into any of the criteria, this is, again, I like to teach you guys from the mistakes I've made myself, and I'm very transparent with everything I do. So Alvi in the last year, if you go look at the chart, if you had bought right here, right, and it dumps down, if you had dollar cost average, okay, you believe into it. Dollar cost average again down here, okay. Dollar cost average down here, okay. But because I didn't check off any of the list of criteria that I have to use before moving into dollar cost averaging, I took a big L, because this was a micro cap. This was something that was not showing continuous interest. This was something that was not being continuously adopted. This was something that was not being pushed in social media. The influence was not there. People were not talking about this project. This was not something that people had a continuous interest to rebound at all. So dollar cost averaging in this would have been a complete big L. And guess what? I took this L. I lost over 6 figures into this project. And I'm sharing you guys with, my biggest mistake that I made was, hey, this is an example that you would not want to dollar cost average into. Now, I've answered simplified everything with dollar cost averaging, but what exactly is it now? Well, like I said, we move back to our first scenario. We go back to Bitcoin and we look at Bitcoin. Let's say Bitcoin were to go to $10,000, right? We bought in at $10,000 and it crashes to $5,000. So dollar cost average means your average of your buys. So if I bought at $10,000, right? And then Bitcoin crashes to $5,000. So the way we're going to work this out is we add the 10,000, we add the 5,000, and now we divide it by 2. This is our now buy and entry, which means now we have averaged down our entry for Bitcoin. which means if Bitcoin goes past $7,500, right? Let's say I buy one Bitcoin at 10K, another Bitcoin at 5K, my dollar cost average is now set to 7,500, which means if Bitcoin bounces above $7,500, now I am making some profit. So anything above 7,500 is now pure profit. But let's say Bitcoin crashes again, right? Bitcoin crashes again. So then I buy, it crashed down to, let's say, $3,000. So now I would do 10,000 and I buy it again, 5,000. I bought it again at 5,000, right? And I bought it again at 3,000. So now we bought at 10K, we bought at 5K, and we bought at 3K. So now we divide this. Our total dollar cost average is now 6K. So now if Bitcoin goes above 6,000, I'll be making some profit. But again, now Bitcoin is at 3K. So to get above there is going to be very difficult. So your dollar cost average is the average of your total buys. So you bought at 10K, you bought at 5K, you bought at 3K. Now you have averaged down to around a 6,000 buying entry. Even though Bitcoin's at 3K, you've dollar cost average, and now your buying entry is averaged out at 6K. But there are different scenarios that you have to check off on, which we can go back earlier in this video and see all the checklists, right? Bitcoin does fall in all those categories, so dollar cost averaging into Bitcoin would be a smart move. But dollar cost averaging into anything else that's a low cap to a mid cap is very risky, because your dollar cost averaging is going to be only be more of a negative reflective to your portfolio, because, well, Bitcoin has everything that those mid caps and low caps don't have, right? If I were to go look at Vidi, right, which is probably never going to ever recover, my dollar cost average is like God knows how low. So I'm not going to see a bounce back on my entry, and I've taken the L. So you don't always want to dollar cost average, and dollar cost averaging is not the solution to all your issues in crypto. You have to make sure when to get in, because and what you're investing into and what your dollar cost averaging into. So that is what DCA means. That's what dollar cost averaging means. And those are the do's and don'ts in dollar cost averaging. So again, be sure to like, comment, subscribe to this channel if you guys want to watch more videos in the complete crypto guide. Again, be sure to join the Discord. If you want to support me further, you can always check out the links below. See you guys in the next video.